Gomeste, Managing Director at Kirloskar Ferrous Industries. Mr. Gomeste, hi, morning. The YY numbers were a little soft. Revenue of 4.4%, EBITDA was flat, but you're still maintaining a 15% volume growth. Is this growth going to be back-ended?
Yeah, good morning to you. I think it's very important that we started the year with the war effects. We had a lot of supply chain challenges in the early first quarter with respect to fuel, especially the LPG. So I think first quarter is a mixed bag, though we have very strong demand for our main product castings, and we are increasing both production and sales in castings. And we also had the mixed bag effect of soft numbers in terms of quantity as well as pricing from the tube business. Whereas pig iron, casting and steel did reasonably well and recorded good growth, but I think the tube a little bit soft. I think we have the 9 more months for the tube business to recover. And overall, I would still say that we'll maintain the growth expectation around 15% for this year or slightly better than that.
Mr. Gomeste, is that subject to the macro improving, or you would be hopeful that you're able to achieve that given the current conditions as well?
No, I think it's very important. Last time also when I talked about it is the pig iron business has picked up and has improved in terms of margin. Not only that, now it has become possible to export pig iron. We have started exporting pig iron, and even from the interiors of the country, not only just the port-based companies, but we are also started. And the export realizations are better than the domestic. It will give us the support on the domestic market also. I'm quite confident that we will surpass the last year pig iron quantities at least by 10%, and we will go very close to producing liquid metal of 7 lakh metric ton, which will be historically high this year. And with respect to casting, I think the going is very strong. We have come to very close to 2 lakh metric ton per annum run rate. I'm look forward that within a quarter we should reach to more than 45,000 metric ton per quarter, which amounts to almost more than 25% growth on the casting business compared to last year, quarter 1 or quarter 2. And with respect to steel, I'm pretty confident we will cross this year 1 lakh metric ton of steel sales. And our team on the steel tube also, there are the orders in the pipeline. We got affected in the export. So there is, as you know, volatility in the oil and gas sector with the war around the Gulf. And also exports to US got affected. Europe got affected because of the uncertainties in this oil and gas sector. I think it has become a new norm and everyone has started moving forward, and we have also started moving forward. I think we will recover from whatever the loss of tubes in the quarter 1, subsequent quarter. And overall, I think we will do better than last year substantially in overall all the 4 businesses put together.
Give us a sense of the kind of CapEx also which you are setting up, sir. You have earmarked 600 to 700 crores for FY27. And that's coming up to nearly 3,000 to 3,500 over the next four years or so. How are you going to fund that CapEx, and are you going to see enough internal cash inflows coming in to fund that?
Yeah, I think it's very important that next 3 to 4 years we have laid out very strong CapEx plans and programs. As you know, in the e-auction, we got the iron ore mine, which has the capacity to mine 1.2 million tons, and we have to set up beneficiation and pellet plant to utilize that iron ore in our blast furnaces. We have also planned to upgrade the Hirur blast furnace so that we produce full quantity with efficiency, like what we have been doing in copper blast furnace 1 and 2. Overall, we will move very close to 0.9 to 1 million ton of iron making. And this project, we have already started. And with respect to steel making in Koppal, everything is in place. We want to move ahead and see that we at least one blast furnace output, we move from iron to steel and add value. This steel blooms can go to Baramati, we add. So what we are looking at, iron ore mining to machine casting and iron ore mining to seamless tubes. I think it's a both backward and forward integration, and we would like to see that it seamlessly get connected with the value chain within these 2-3 years. And we are uh, uh, maybe a certain timeline we get affected because of the war conditions, and we start rethinking on that. But I think we are going ahead with this 3.5 crores of capex for the next 3-4 years, and we are committed to doubling our volumes in all our product, and also it should give us the decent good growth. We have been maintaining 15% CAGR over more than 2 decades, and we want to continue with that journey, which I think there are challenges, but I think in the medium term and long term, I think there is no change in our the goals and vision what we have carved out for KFIL.
How do you fund the kind of capex you're doing? It's a large amount of
Yeah.
capex.
I think we have very strong numbers to support this capex. You have seen we acquired erstwhile ISMT, and we have funded, and we have not gone up on our loans. And we have also been investing very regularly. I think if we need to borrow, we will definitely borrow, but it will remain short term. And in the long term, we will be cash surplus at the end of 4 years, 5 years with this kind of benefits coming. Very shortly, as you know, we have recently commissioned the 35 megawatt solar power plant, and we are also commissioning within the next 2 months to 3 months 12 2.1 megawatt windmills, and we expect something like 70-80 crores of annual benefit start accruing from October, November onwards. And these all support in terms of increased value addition and increased cash generation, which will definitely support us for all our future capex. Also, it's very important to we have already invested well and created very close to 250,000 ton of casting. And as you know, last year we were around 152,000 metric ton of casting sales, and we are already invested very well. Some more debottling is left out, but with the main investment with these 6 foundries, we can go up to 265,000 metric ton per annum of casting sales. So, which is very huge sales, and casting demand is good, and we are there with the capacities. And we also said that we need to invest further in the foundries also to support our customers. We don't want to say no to our customers. We will continue to grow with our customers and support in their program as far as the iron castings are concerned.
Are you also looking at value add, going into machining, sub-assemblies and higher value products?
Yes, definitely. Every location of ours has the machine shops, and we are year on year, quarter on quarter, we are improving the realizations, and we are adding the value with more machining. And that is the requirement of our customer. We will precisely deliver what our customers want. I think it's a very logical that we should not only produce the castings, but also machine it and make it ready for assembly. And that gives value to us, as well as that gives value to customers. They don't have to do anything, and it goes directly to their assembly line.
Okay, thank you so much, Mr. Gumaste, for coming in and speaking to us. Really appreciate you giving us your time.
Pleasure interacting with you. Look forward in future as well.
Pleasure is
Thank you
completely
so much.
ours. All right.